Alright, this here is euro dollar in the Christmas week. So I'll tell you my thought process and what I was looking for why I've classed this as a holiday massacre. So the first thing I was looking out for an objective to take place. An objective can be a PD array or just some information one should consider. So my first objective was the fair value gap, see how it was treated. So I saw that it didn't hit the midpoint, but it came into the area of the fair value gap. The white line represents after the close, move forward. So this is what I did. After the close, move forward. Then I saw two things take place. One of them, this candle, for the market to go up and come back down. This and this is, I would say, is a relative equal low. So if it's a very relative equal low, I would look for the market to possibly look for it to do two things: either have a displacement or wick at that level. In this case, it has worked at that level. So what I would normally do also, I would look for this leg and see the PD arrays that's been in this leg, because this is the leg that went up to the fair value gap on a day. So ideally I will be waiting for my first objective PD array would be this here would be my point of interest. This here would be my point of interest as well, but also PD array. And nothing happened. So on the day, I mean on the 4 hour, this can express that there's a heavy trend that's taking place, or that could take place, and it doesn't even have the momentum to go to a fair value gap. And also it could also represent that it's trying to get to somewhere very quickly, and then later on it will come back to it and then take it. So two things. So once I saw, also I didn't take this trade. This is just, I didn't trade on Christmas Eve, Christmas Day, Boxing Day. I haven't traded. This is just something I've seen at the week. Look, within this week, I thought, let's just see what it does. See if it can produce some value, and I believe it can. So let me continue. So drawing liquidity here. Yeah. Let's do it. light blue. So from that taking place, I would have, from here to here, because it took out this low. That's the reason I'm focusing on this look, and it's from the 4 hour. So I'm looking for any objective that has completed or has taken out the 15-minute. Of course, this is hindsight. So in that case, this is taken out a fair value gap. It has not shown the willingness to go through this up close candle. So some people might find it for a reason to enter, but one thing I do believe, and also ICT does say, is time and price, not price and time. So price should come first if you look at the enter, then price. So time should come first, then price. So in this case, it wasn't within the time. But one thing I have seen from this expansion, yes, it has taken it out here, yes, it has paused at the 15-minute up close candle, but it has also, with this leg, it has also put in a relative equal low, even 2. This is my lowest one. So it has done that. I don't know if you look here, it wasn't a displacement, it was a liquidity grab. So what I look for in the market to see when it has gone to like a down close or up close candle, did it retrace? In this case, there's no gap here, but it retraced to the up close candle, then to the up close candle. So in my, how I see it as, it has done something for me not to pull out the fib and do the 25%. So it's done. It's done what it needs to do, and then that's why I'm focusing on this leg. So with this leg, it took out these relative equal lows. So when I saw that, bear in mind, I did not take this trade. This is just sharpening my blade, nothing more than that, keeping it sharp. So let's focus on what the market took out. So one thing what I like to do, I like to focus on the lowest candle for my order block. So could be somewhat this one. Yeah, so it's taken out here, taken out a fair value gap above the 25%. About simple. Then if I was to enter, I didn't really see this until now. This is my order block. Then entered from here. Bell. This could be, yeah, my relative equal high. Bell, taking that. This is also on the 5-minute, but because I didn't even focus on this leg, I thought this leg had no fair value gap, so I wouldn't use it. if I was a guy who was catting for trading, I am in many challenges today. Well, I am in many challenges, like prop firm challenges, but that doesn't mean I have to trade. Still take my time. So in this leg, it has nothing, no fair value gaps, but it has gone up against here, but it doesn't give me the fair value gap on the expansion leg. Doesn't give me that, so I didn't note it down. Even though this one right here, but took out that, left the fair value gap. Like I went back here, went to the midpoint, then skedaddled. But this one, fair value gap, broke above this high. And then if you want to look previously to see what the market did before here, they have, of course you can look at it as look, the market took out every down close candle. You can look at it like that, and if you probably go on to the 15, you might see some sort of rejection on the higher time frame, or some sort of understanding what took place with that area. As you see here, it stopped at this down close candle, and also the market went up, came it down, and respected this down close candle, but also put in a low, a double bottom, which is relative equal lows, has put in that. So it could be considered as something to take note of in the future. Well, that's the 15. Let's go back to the 5, and with this one now, it's taken it out nicely. It doesn't, I don't need to consider this leg really, because it hasn't done any damage to this, so I don't need to pull out a fib or anything. But it's pretty clear that this fair value gap could be 1 point of interest. Then you have double top, another point of interest, a potential high, another interest, another objective. But the main thing is what takes place before this, and what took place before this is this and this, and on the higher time frame, the order flow has remained pretty heavy to the upside. So I've seen the higher time frames remain heavy and not showing any interest to say, okay, I am going down. Then fair value gap, well, get in. Could have had take profit there. Remember, this is on a 5 minute. So you could have looked on the higher time frame and think, okay, cool, this could be my exit for one take profit. and then there, and this is a 4 hour that is a 4 hour up close candle. So if I was to enter on the 15th, that would be one of the places I'd be looking to go. That's what you see here. And with this one, it's pretty much the same thing. The expansion on the 4 hour, what I would be focused on is this leg, because it fulfilled this objective of the fair value gap. If you want to, you can focus this here as well, because it touched the down close candle. So you've got quite a few places to look at, and even with that, that's not my entry, nothing here, but what took place afterwards. Oh, in the mix, for one, from this expansion, it didn't go to any up close candle, fair value gap, order block or whatever. Didn't do none of that. The market, what, took out these lows, yeah, took out these lows, these relative equal lows, then back, took that out, so I could focus on this leg, but I didn't. So, well, and then it took out this up close candle and this up close candle, and left the fair value gap, got tagged in. Then that would have been my not terminus, so all trades out. So me personally, I put 3 trades on the board per setup, so that's why I would have had 3 different take profits, but one of them would have been at this level, the entrance of the up close candle, and then seeing how the market was, I could take it off there. But then there's also this trade, just for shits and giggles. Look at this. See, this would have brought home, if I was to get into the mix. So 4 to the first one, but remember what I did say, honestly, because it was on a 5 minute, I would have took something off right there. 2.38 risk to reward, then probably would have took off another one there, and then another one there, and that's just on one of my entries of the 2 entries I take once I'm in profit, or if I get a fresh account. This is what I do. Once I lose, I drop it down to only 1 trade per setup, not 2 trades per setup. But anyway, so this one, five and a half, let's say 4.85, and 283, and then plus these trades here, which was 2.6 and 1.8. That's the reason why I called it a massacre, because there was opportunities over the holiday period. There's a lot of money to be made. I didn't make it. I have no shame in it. But these are moments to sharpen your blade, to make sure you understand what's going on in the market. Yes, you might not trade because, you're enjoying the holiday period, but we can still not lose the skill or not lose focus and take note of the opportunities. So next week, what is my agenda or my outlook in these trades? Well, not these trades, but in this market. So the market could potentially go up here, take this out, wick here. If that does, then that would be my daily objective right here. If the market does that, then I want to wait, see on this leg what happens. Does it show any PD arrays that the market could take out and then leave a decent trail behind it? Waiting for that, and then go down to the 15 and then do the same thing over and over again. So that's my outlook. This pair, SP 500, I believe it did have an opportunity. I think. Oh no, didn't have an opportunity, but what I'm looking for the market to take place. So just a quick one, nothing big. So it has an interest. Seems like it has an interest. Down close candle, wicked here. So my next thing is to see if the market continues with that trend of bullish momentum. Seems like the bullish momentum has showed us somewhat of a trait, and then wicked at this down close candle, and then from that leg I don't have any 4-hour objectives. The main objective here is this midpoint, that's one, and the market did return to this wick, so rejection block turning possibly to a relative equal low. So what I would be looking for ES or SP 500 to do is take out this low, possibly hit this midpoint, and then from maybe here to wherever the objective has been taken, show that leg, and then go down to the 15, see if the 15 takes out any PD arrays above the 25%, and then if it leaves a fair value gap, then I get in the mix. If it doesn't, sit in my hands. It's just like that. Like I said, I said this on my thing, WhatsApp. It's about sticking to the plan until it shows you, like, you have to wait for the market to do everything it can possibly do to you. Then once it's done that, it cannot produce anything new, because you have experienced everything it has produced with your strategy. So once you stick to the plan, let it play out. You firm the losses and everything like that. You adjust if need be. Once you adjust, you have that experience. Once you have that experience, you stick to the plan. Once you stick to the plan, you have conscious consistency. Once you have conscious consistency, you have discipline. Once you have discipline, the cycle continues. You go back to patience, go back to willingness, knowledge, all of those good things. And the cycle continues, because it's that cycle what keeps you not anxious. It's that cycle that keeps you sharpening your blade to make sure your blade is sharp. So when the time comes to devour some food, to devour the market, to see the things that you need to see, it's not an issue. And you're going to pull that trigger with no issue, because you've seen it all before. That simple. That's it. Adios.